Hello to everyone. Today I am here with Impact of Leverage on Return Part 2. In order to grasp the concept of the topic, please to watch my video till end. Secondly, if you are interested to have update videos on banking and finance related topic, please do subscribe my channel. In this session, we are going to cover how the corporate firms enjoy tax benefit against leverage. Bank purpose, schedule of repayment and of depreciation, calculation of installment, net of tax benefit. How corporate firms enjoy tax benefit against the leverage. Leverage is the ratio of company's capital debt to the value of its ordinary shares. To explain the concept of enjoying the tax benefit against leverage, we solve an exercise. A 100% equity-based company having the rich market demand of their product, but due to not viability of finance, can't extend production capacity. They hire a consultant for the solution of their problem. The consultant suggests a solution that will provide the dual benefit that includes funding from the financial institution along with tax benefit. The bank proposed 3 years term fund facility equivalent to invoice value that is 50 million, net of 25% equity participation by the prospect means customer on the repayment terms of equal semi-annual installment at the rate of 18% markup or interest. So here invoice value comes to 50 million. Equity participation that is 30% of 50 million is 12,500,000. The net facility comes to 37,500,000. The facility dispersed on July 5, 2020. The schedule of repayment, the facility for 37,500,000 to be paid in 6 equal semi-annual installment. End mode means at the end of every 6 months. The amount dispersed on July 5, 20 comes to 37,500,000. Its equal installments come to 8,359,492 that you will have to pay for 3 years. Means it consists of 6 equal installments. Definitely the equal installment having a part of principal and a part of markup. First of all, you will calculate markup for first 6 months. You will multiply by 37,500,000 with 18%. And it's for a 6 months period, you will divide it by the 2. The markup amounts comes equal to 3,375,000. You will subtract the markup part from the installment. The remaining part will comes equal to 4,984,492. Now, this principal part will be adjusted against outstanding principal. And the outstanding principal reduced to 32,515,508. Now you will multiply this outstanding principal by 18% and divide it by 2. the markup comes to 2,926,396. This markup part will be subtracted from the installment amount. The balance amount will be adjusted against the principal. That is equal to 5,433,096. Now this principal will be adjusted against the outstanding principal, and the principal reduced to 27,082,412. In this way, you will calculate all the adjustments of markup and the principal against the facility. And on July 5, all the principal, outstanding principal will be stand as nil. Now, from this schedule, we can have the figures related to markup expense. These are all the figures against the markup expense. Thereafter, we are going to develop the schedule of depreciation. The nature of asset is machinery, having a useful life of 5 years, and the facility is sanctioned for 3 years. So, for the 0 year, the invoice value is 5 million. Here we have missed. Here the book value also be equal to 50 million. For the first year, we have applied the straight line method. 10 million is adjusted against the depreciation expense. Accumulated expense is also equal to 10 million, and the book value reduced to 40 million. For the second year, again, depreciation expense, book at 10 million, accumulated depreciation comes to 20 million, and the book value comes to 30 million. Thereafter, for the third year, depreciation expense is 10 million, accumulated depreciation comes to 30 million, and the book value comes to 20 million. We need it only for the 3 years. In case of a equipment, usually the life of equipment is 3 years. So after 3 years, fully asset used to be depreciated, and you can get more tax benefit in case of the equipment as compared to the machinery because of the difference of their useful life. Calculation of the installment net of the tax benefit. The two tax benefits can be enjoyed against the two types of expenses that include markup or the interest expense and the depreciation expense. So here we have the installment. Here we have added 2 installments for each year, because the depreciation is calculated or the tax is paid on yearly basis. For the first year, we have the sum of 2 markups, first 6 months and second 6 months markup. Here we have the yearly depreciation, and total expense comes to this much. For the second year, because of the reduction in the value of markup expense, the total expense is also reduced, and in the similar way for the third year it's also reduced. Here we have applied the tax benefit at the rate of 33%. Now the installments comes to the installment net of tax benefit for the 3 years comes to equivalent to 36,080,158. Whereas the facility we have utilized equivalent to 37,500,000. So it means after having the tax benefit, we have paid the less amount than the facility we have availed. Now here, we are going to calculate calculation of the installment, net of tax, the cost of long-term loan comes equivalent to 36,80,158. That is less than the facility value of 37,500,000. It means prospect borrow the money from the financial institution and pay back less the amount as calculated after tax benefit. One more important thing is, even the firm borrow the money against the revenue generating asset. In many cases, asset itself meets its financial obligation from incremental cash flow generated. So it's the difference between a corporate sector and the informal sector. Corporate sector play smartly and get the benefit that can be enjoyed by all legal ways. That's why corporate sector hire competent people on high salaries, because those competent people not only justify their salaries but also give benefit to the organization as well. Thank you very much. See you again with the upcoming video on the banking and finance related topics very soon.